Welcome to episode 22 of the 5-Minute Investor Podcast, where Stockhouse columnists Jonathan Brown and me, Trevor Abbess, each deliver a 2.5-minute stock profile related to recent news stories with investment implications. This week, following the Bank of Canada's interest rate hold at 2.75%, we're analyzing stocks that make a strong case for enhancing portfolio returns in falling as well as rising interest rate environments. John, in your estimation, where should investors cast their gazes in search of rate insensitivity?
Trevor, like you said, the big news of last week, both the Bank of Canada and the U.S. Federal Reserve decided to keep their interest rates where they are. So it's all good news right now, but any calm before a storm is the right time to batten down the hatches. President Trump wants interest rates lower. He's had a very public feud with Fed Chair Jerome Powell about it. What the U.S. does, Canada often follows suit. If things get volatile again, you can rest assured the stock market won't play nice. We have found several stocks that are resilient to this turbulence, and you can read about them all in the show notes to this podcast. But today I will pick one, and that is Andlauer Healthcare Group. It is a healthcare logistics company that trades in the TSX under the ticker AND and has a 2 billion Canadian market cap. What makes Andlauer distinct is that it specializes in transporting pharmaceuticals, medical devices, and other healthcare products across Canada. Its services are essential because everyone needs meds eventually, regardless of interest rates. Its service is highly regulated and largely insulated from economic cycles. Andlauer's revenue base is stable. The company also benefits from long-term contracts and a strong logistics network. This makes it a pretty defensive play in any rate environment. Now, the company recently announced its Q2 shareholder dividend of 12 cents per voting share, and its Q1 revenue totaled 166 million Canadian. That's a 3% increase from Q1 2024. Andlauer stock is also up over 26% compared to this time last year. And it's likely many investors out there are trying to buy up shares before the company gets sold off to a UPS affiliate. Its share price spiked back in April when that news came out, and it's been trading in the neighborhood of $53 Canadian ever since. Again, that's Andlauer Healthcare Group on the TSX under the ticker AND. Hey, what's the point in being healthy if you don't also look good, right, Trevor? What stock was in fashion on your end?
That's right, John. As you say, my focus this week was on Canada Goose, ticker GOOS on the TSX, a luxury outerwear, apparel, footwear, and accessories brand beloved for its Canadian-made parkas that has become synonymous with the intersection of sportiness and style, driven by its mission of keeping the planet cold and the people on it warm. The company, founded back in 1957, has had its highs and lows, including perceived over-reliance on the Chinese market, but has managed to claim an enduring spot in luxury fashion by cultivating an image of elegance, ruggedness, and social consciousness, with a focus on community and sustainability, attracting everyone from celebrities to soccer moms to the aura of exclusivity a $2,000 parka can provide. Canada Goose bounced back from the COVID pandemic and has endured post-reopening inflation with aplomb, increasing revenue every year from $903.7 million in fiscal 2021, down only slightly from $958.1 million in fiscal 2020 to $1.348 billion in fiscal 2025, supported by strong average annual net income of $78.1 million. The company's Q4 2025 was a strong one, generating higher year-over-year revenue of $384.6 million, concentrated in North America and the Asia-Pacific region, with a meaningful presence in Europe, supported by $27.1 million in net income, up from $5 million year-over-year. While Canada Goose posted a net loss of $125.2 million in Q1 fiscal 2026, and will not be issuing guidance for the year because of how U.S. tariffs are destabilizing global trade, the company did manage to deliver a 22.4% year-over-year increase in revenue for the quarter, supported by a 25.9% jump in gross profits and substantially lower net debt, taking strides towards greater operational health. As discussed in my profile on the company published last week, Canada Goose also has a long history of instituting price increases in tandem with operational enhancements, including 2024's 17% layoff, to stay on track for long-term growth, earning it considerable conviction towards a long-term investment. As management expresses in the Q4 2025 investor deck, The team remains confident in the strength of the brand, the company's solid financial position, and its ability to adapt to changing conditions. As always, you can find links to the articles from today's episode in the show notes, and you can find more investing insights on Stockhouse and the market online. The 5-Minute Investor is on Spotify, YouTube, iHeartRadio, Podbean, Stockhouse, or wherever finer podcasts are found. Thanks for listening, and we'll see you on Monday. This podcast has been prepared as part of a partnership with Andlauer Healthcare Group and Canada Goose Holdings, and is intended for informational purposes only. For full disclaimer information, please visit themarketonline.ca/disclaimer.